Good afternoon, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, what to do when your open trade runs into a news event, mainly earnings. So, really, this is a situation that I hadn't given much thought to, but it's come up a couple times here in the last month or so, and mainly because it is earnings season. So that's why it probably came up. But I'm sure it's something you all have dealt with or seen many, many times. But when you have an open trade that runs smack dab into the middle of a news event that could markedly change the trajectory of your trade, what does one do? Do you keep the trade open heading into the news event, or do you, I guess, let it ride, if you will? So this came up for me today, watching a Two Sigma trade that we had open, uh, closed it earlier today, about an hour before the market closed. And you can see here, we opened this trade on Thursday. It looks like what was the date? May 15th. So real short-term deal. The trade was triggered by our big, beautiful green diamond. And now we get the snapback rally. This is truly the Two Sigma snap, the 2SS that we talk about frequently in the Two Sigma ecosystem. But here's the interesting thing. Today, we had a market that opened lower. Uh, BJ's opened a little bit higher, but then traded lower. That actually then triggered something that was ongoing throughout the day. We went from a yellow bar, right, caution ahead, to flashing a red bar throughout, really off and on throughout the entirety of the day. Like I said, with an hour to go before trading, the bar was red per our rules. Then we closed this trade. But as you can see here, by the close, the trade spiked. The market actually found some buyers at the end of the day. And what was a red bar went back to being a yellow bar. Now, let's just, for hypothetical purposes, pretend that we did not close this trade. Now, here's the thing. BJ's reports earnings on Thursday. That's going to be a big market moving event. Now, you have, since the green diamond appeared, between 7 and 8% of gains here on just the underlying stock. The options, anywhere between 85% and over 100% on an option in a 3-day trade. So that really is quite spectacular. What happens if the earnings, the news event, if you will, is a negative story? The company, for whatever reason, misses expectations. We've seen retailers report mixed results throughout this first quarter earnings season. And BJ's, unless you have insider information and you know what's going to happen, could most certainly report earnings that disappoint. I'm guessing that could send the stock down anywhere between $10 and $15 per share. That would take us almost right back to where we started. And that would be quite the shame. So, my personal approach to these situations, especially when you have a big snapback rally here, like we did on BJ's wholesale, is to close the trade in front of the big news event. Now, if the trade had simply moved sideways since we opened the trade and we were running into the news event, that's a different story. But in this situation where you have big gains, the news event, I don't think it's worth the risk. Now, I'm not saying, BJ's could surprise to the upside, and, this beautiful gain here could be even more beautiful. So you are taking, in my opinion, risk that you don't need to take, especially, like I said, when you have a gain to start with heading into that news event, in this case, the earnings report. That's all I have for today, folks. When you run into this situation, I think, it uh, should be considered that even though a trigger wasn't met, you may want to lock in profits nonetheless in advance of immediately in advance of an earnings report or other big news event. This is JD for the Rational Trader. I'll be back tomorrow with another video. Take care, everybody. Have a great day, and we will see you tomorrow.